Imagine you're standing at the edge of a cliff, looking out over a vast ocean. The view is breathtaking, but there's also a part of you that feels a little anxious. The wind is strong, and while you're standing on solid ground now, the edge feels closer than you'd like. This scenario might sound dramatic, but it's not unlike how we often feel when thinking about risk in the world of investing and finance. Risk can be both thrilling and daunting, something we both seek and avoid. So, how can we understand and manage it better? Let's start with a simple truth. Risk is everywhere, and it's not just in finance. Crossing the street, taking a new job, even trying a new dish at your favorite restaurant involves some level of risk. But we don't stop doing these things because of that. What we do, consciously or subconsciously, is assess the likelihood of things going wrong and make peace with the uncertainty because the potential rewards are worth it. In finance, risk management is about doing just that, but with your money. When you invest, you're putting your money to work in the hope of getting back more than you put in. But just like standing at that cliff, there's always the chance that things might not go as planned. Markets can crash, companies can falter, and economies can shift in ways we didn't foresee. That's where strategies come into play, helping us navigate the financial landscape with more confidence. Let's break this down with a simple example. Imagine you're a sailor charting a course across the ocean. Before setting sail, you'd check the weather, plan your route, and ensure your boat is in good shape. You'd also have backup plans in place in case the weather changes or something unexpected happens. This is risk management. In investing, this means diversifying your portfolio, setting stop-loss orders to limit potential losses, and continually reassessing your strategy in light of new information. Now, there's a psychological aspect to this too. When it comes to money, our emotions often run high. Fear and greed are powerful motivators. Fear can keep us from taking advantage of opportunities, while greed can lead us to take risks we're not prepared for. A key part of risk management involves recognizing these emotions and balancing them with rational decision-making. Ask yourself, am I investing because I see clear potential, or am I just afraid of missing out? Or perhaps, am I holding back because I'm genuinely concerned about risks, or is it just fear speaking? One of the best mental models to use in risk management is thinking of your investments like a garden. Just as you wouldn't plant all the same crop, in case pests or bad weather ruin your harvest, you shouldn't put all your money into a single investment. Diversification is your friend. By spreading your investments across different assets, industries, or even regions, you protect yourself from losing everything if one area takes a hit. It's also crucial to remember that risk isn't static. It changes with the market, the world, and with us as individuals. When you're young, you might be able to take more risks because you have time to recover from losses. But as you get older, your risk tolerance might decrease as you prioritize preserving wealth over growing it. This is why regularly reviewing and adjusting your risk management plan is vital. From personal experience, I can tell you that one of the most liberating moments in investing comes when you truly understand your risk tolerance and align your strategy with it. It's like finally finding a rhythm that matches your natural pace. You'll sleep better at night, and you'll make decisions more confidently. And remember, it's perfectly okay for your risk tolerance to be unique. Some people thrive with higher risk, while others prefer stability. The key is being honest with yourself about which camp you belong to. Let's touch on the idea of long-term wealth, an area where effective risk management truly shines. Building wealth is a marathon, not a sprint. By managing risk wisely, you protect your investments from the inevitable ebbs and flows of the market. Yes, there will be downturns. Those are as certain as the tides. But by staying the course and sticking to your risk management plan, you're more likely to come out ahead in the long run. In the end, understanding risk management is about embracing the uncertainty of life with a clear mind and open eyes. It's about making informed, thoughtful choices rather than letting fear or greed dictate your actions. So next time you find yourself pondering an investment decision, take a moment to visualize that cliff again. Remember the exhilaration of the view and the peace of knowing you've got solid ground beneath your feet. That's what good risk management feels like. Secure, but ready to explore new horizons.